Morning all. How are we all doing? Morning Peter. Morning Ian, Amy, Michael, JC, Harold, Virginia, Kennelly, Bradley, Day Trader. How are we doing? Marco, Monkey, Christian, Gregors, AC, Ismet, Como, Derp. How are we doing? So big gap downs today after what's gone on with Hamas in the Middle East. Market's scared to death. Oil price is going to rocket through the roof. Morning, ladder. So DAX this morning, we've got a very big gap down at the minute. We've gapped down 110 points, half an ADR basically. US indices, we've gapped down 99 on the NASDAQ, so roughly third of an ADR, so somewhere between a third to a half of an ADR gaps this morning. So obvious play today with the indices is gap up, but this could be the market entering a phase of get the hell out, in which case it's just a gap and run. So when you get a gap like this, it's one or two scenarios usually. It's a gap fill or a gap and run, and we just basically run for it. So the break today could be a big one. We'll see what the market does. Oil has gapped big as well. So we haven't had a gap like that on oil for a while. The last gap we had on oil, which was a similar size, was back after... There we go. We gapped up. We played the gap fill on this, if you remember. We sat in this for days. And then we took that break, and I took that break short for the gap fill there. In fact, I think I got in earlier, didn't I, when we pushed back into that balance? But I can't remember. But anyway, so that's the last time we had a gap fill. This was a kind of week and a bit of sideways movement after that. But at this point, we were obviously trending down and everything was going the other way. So at the moment, everything's going back the opposite way. So we'll see what happens with this. I'm looking to get in long on this oil. We'll have a look at the news and everything in a sec. I'll just cover this while it's relevant. So oil, we were looking for a pullback on this second leg that we had up. Go to the 4-hour chart. So we had a push and a pullback. Second leg, pullback from $95 a barrel. Target is $100 a barrel. Now we've just had this news. I suspect the market will probably want to rally into it. The question today is, are we going to fill the gap first, or are we just going to gap and run? So I've got a pending order, as you can see, set here to trigger if we decide to rally today and just go for it. The other problem we've got today is it's a bank holiday, US, Canada, and yeah. So it's going to be quite quiet market today. Low liquidity. Low liquidity is big slippage. So if there's a lot of big movements in the market today, when we've got light liquidity, we could get some very, very, very big moves. So we'll see what happens. Typically on a day like this, where you've got 3 bank holidays, it goes like that. London sessions like that, and then New York is inside it. It's just dead sideways. Sometimes when we get a bank holiday, especially with Japan, we get huge movement. So, and with what's gone on over the weekend, this thing could go absolutely anywhere today. So could the indices. So it's going to be a tricky day today. So I'm looking to get along on oil because it's a natural pullback long play anyway. And now we've had this thing kicking off in the Middle East. There's a good chance it's going to start to rally. Reason being, obviously, all the oil production is either out of that sort of area or piped through that sort of area. It's not so much the area where the fighting is at the moment, it's more the expansion of the combat, taking it out into areas where it's going to interrupt oil production. So, yeah, interesting. We'll see what happens with that. News-wise, obviously, over the weekend, we've had main news, oil jumps on the Israel-Hamas war. Calling it a war already. Strengthening pressure on the crisis in Israel, blah, blah, blah. there's not a lot else that I can see at the moment overnight. We've had the industrial production for Germany, which is down. So that's negative euro. We've had Kazakh speaking this morning, but apart from that, there's not a lot of overnight news. So today, we've got 2 minutes to the open. Today is a bank holiday. There is absolutely no news scheduled. So there's no news, no live room this afternoon. Markets are shut this afternoon. So, well, they're not shut. I mean, there'll be movement, but I mean, it's going to be crap. So no live room this afternoon. And no news scheduled. So I'm expecting a flat line today. However, we've had a lot of stuff happening over the weekend, so it may not be like that. Main news this week, we've got no news tomorrow really at all either. Main news this week is PPI on Wednesday and FOMC meeting minutes on Wednesday. So Wednesday is the core day today. After the FOMC meeting minutes, the following day we've got GDP for the pound, and then we've got the CPI, so the inflation figure for the US. So huge US day, huge US evening, huge US day, followed by the China CPI, and then we go into University of Michigan, which can be huge. And we've got Bailey speaking. He might be saying something interesting, and Lagarde and Harker. So nothing at all this week until Wednesday. So Wednesday all kicks off. Tuesday, tomorrow, I suspect we'll either have a very quiet sideways day, a little bit like today, or the market will move on tomorrow with a view to potentially reversing the situation on Wednesday. Right, so let's look at the DAX. Obviously, today, really easy target-wise. Got 5 seconds to the open. See where we go. Didn't manage to get the order on yet. Short on the DAX. Only got one on. That moved really quick at the open there. Didn't manage to get the orders placed by the time the market had gone on. Had made a move. So short, little bit of slippage, and managed to get one position on, annoyingly. The downside target today is going to be down to the low from Friday. Upside target is obviously the gap fill. Very, very simple. So if we rally to the upside today, we'll be looking for that gap fill move. If we rally to the downside, we'll be looking to target there. However, obviously, if the market is spooked, which is why we've got the gap down, we may well break these lows. And as you can see, next stop is last week's low, which is this kind of big propulsion move that we had to do that gap fill. We then sat sideways. We had the news on Friday. And then, so basically, we're looking for ADR for last week's low to the downside. But we got this really good, strong area of support before that, which is which is basically yesterday's low, Friday's low. So there's your shorts. So I'll be watching a target of 2R and then see where we go from there. But a bit worried about gap up. I hate going short on a gap up. Get down rather. Much rather go long, but we will see where we go. Morning, everybody else who's turned up. Neo, Prince, Antoine, Jerry, Peter, Altro. We'll have a look at the FX markets in a minute. Let's just see what happens with the DAX at the open. Doesn't seem particularly volatile at the minute. Give it a chance to wake up. Morning, Hennas. Flip-flop. FTSE has filled its gap, has it? I haven't got FTSE, but I'll trust you. Might be a bit of a grind today. We'll see. A little bit tricky when you've got bank holidays. And especially, I mean, when you've got a bank holiday and you've got what's happened over the weekend with Hamas, it's tricky to know what the market's going to do today. Whether it's going to be quiet or whether it's they're going to run for the hills. We will see. Guessing the gaps are because of the whole situation with Israel, yeah. We get gaps anyway. Oil specifically, that gap is definitely speculative longs. So last time we had a gap fill, a gap like this, again, was on news. But we went literally sideways for about a week or so. Then we came back and filled the gap. So it really it's impossible to tell what the market's going to do. Obviously, if we knew it, we'd do it, wouldn't we? But I'd be much more interested in longs than shorts. In fact, I'll tell you what I'm going to do. I'm just going to get rid of that order. I'm going to split it. I'm going to put buy stop here, and then I'm going to put another buy stop above the high, and give it a little bit of breathing room. So I'm going to trigger a second. I'm going to split this position into two. So what I'm happy to do with this particular situation now, because I was looking for an oil pullback, we're not going to get a reverse alert on it because it's already happened and it's gapped, basically. So one of two things is going to happen. We're either going to leave this gap alone and we're just going to start pushing up to $100 a barrel, or we're going to come down and fill this gap. So if it comes down and fills this gap first, when it fills the gap, I will just drag this order down and get in on a reversal alert when we do have the gap filled. And then I'll just add a second position onto it. So I'm scaling it in twice, basically. If it triggers before it does the gap fill, i.e. it triggers me and then decides to do the gap fill, I will put a second position on at the gap fill, which brings my average down, and then look for a long move from there. If it just goes, brilliant, I'm on. So, but I will be constantly panicking about that gap being filled and worried about them coming all the way back down again. What can you do? Okay, shorts rejected. Looks like we're flipping long. So I'll adjust the TPs on this when I get hedged, but looking for the gap fill to the upside, basically, by the looks of things. Although not a massive amount of volume this morning, is there? The other indices are doing. Didn't trade any indices on Friday. What a move. If I had have traded the indices on Friday, would have been a massively profitable day, but I didn't. I was expecting the news spike to have a little bit of a calming effect on the market when it opened, because it would have done its volume. Boy, did it not have a calm Friday, did it? Huge moves. Yeah, I can't quite make its mind up this morning. We'll come back to that in a minute. Right, so let's have a look at everything else. So far this morning, obviously, we've looked at the news. There's not a lot of news out on anything else. We've got no news today at all. It's a bank holiday, so there's no session this afternoon. It's very, very quiet. Friday was obviously a very big day. So if we go back to Friday, we had the unemployment rates come out for the US. Unemployment has not gone down. It hasn't gone up, but it hasn't gone down. So that is negative for the US. So on Friday, they basically rallied the US hard when the figures came out. And then obviously everyone went, hey, look, non-farm payrolls come out positive. Everybody buy the dollar. And then the banks went, haha, tricked you. It's actually the unemployment rate we're looking at, as I keep saying. And yeah, flip back the other way. So a lovely profitable day on Friday. Again, another big day, 2.38% banked loads. So what we've got at the moment is a situation where the US dollar obviously has been going through this big rally. We've been waiting for this weakness to come through on the US dollar. We've been waiting for a negative news event, basically. And basically, we got one. So we got the negative news there. We had the negative news about the unemployment change for non-farm on Wednesday. So unemployment claims were kind of as expected. So we started to see some weakness coming through in the US. However, this weekend, we've had a load of problems over in the Middle East. And that is always good for the US dollar. War is good for the US dollar. So it's a very tricky situation at the minute with this, because I would expect, now we've had this reversal on the 4 hours, you can see on the Swissy, to start that pullback underway. May not be that the US dollar comes down. It may be that we just pull back and then go into either a range, or we do actually put another leg in. Who knows? But the situation we've got with the US dollar yen at the minute, where this intervention move that we had, which is or isn't an intervention, there's lots of speculation now that this wasn't an intervention. Fine. If it wasn't an intervention, but this is whether or not the Bank of Japan did this or other banks did this because the Bank of Japan asked them to is irrelevant. What is an intervention? An interference with something. Whether or not the Bank of Japan did the purchase themselves or they got other banks to do the purchase for them doesn't matter. It's an intervention. Yeah. If something's moving along and I go and stand in front of it, I'm intervening. Yeah. If I push someone else in front of whatever's going along, I'm still intervening, although I'm not the person standing there. Yeah. It's just, lots of people have contacted me saying this wasn't an intervention. What was it then? If it wasn't the Bank of Japan, it was their friends. They still asked their friends to do it, intervene. Yeah, it's still an intervention. So whether or not it holds, we don't know. We'll have to wait and see. So with the US dollar at the minute, we've now got negative news. Unemployment isn't coming down, which is not good for the US dollar. So everything we've had so far has been negative US over the last week. However, war, if it kicks off, is very, very strong for the US. Oil prices rallying, good for the US. So there's lots of things that could rally this and could dump this at the moment. So we're still in a very, very tricky situation with the US. We finally get what we wanted, some negative news, then something else kicks in and possibly trumps it. So we'll see what happens. But at the moment, it's select. Why can't I deselect it? At the moment, it's difficult to tell what's going to happen with the US at the minute. At the minute, we're having a little bit of a rally. So everything's coming down against the US at the moment so far this morning. However, what I would expect to see today will be some kind of rotation day, because obviously the US is shut this afternoon. And then probably tomorrow, because we haven't got a lot of news, a similar sort of rotation until we get to the news on Wednesday. So FOMC, PPIs, CPIs, all the stuff that drives the US dollar, all being announced from Wednesday this week. So far today, nothing to look at on the ADRs, as you would imagine. We've had a very quiet Asian session. Nothing much has moved. If you flick through all the Aussie pairs, not a lot of movement at all. Gaps all over the place today, but not really any movement anywhere. Euros not gone anywhere. Pounds not really gone anywhere. We've had a little bit of negative movement on that. Nothing specifically exciting happened. Obviously, weekly ranges, we've got nothing to look at yet because it's only the second week of the month. The monthlies, obviously, on there. So nothing to look at there. RSI dashboard, totally flat. Yeah, everything's reset because everything that we've been getting into has started to play out. So, nothing to look at really today. So what I thought, there's not much point. I was going to go through every single pair today, but there's not an awful lot of point because everything that we've got is going to be quiet. So if I do any kind of analysis on anything at the moment, it's going to be, it could go that way or it could go that way, but unlikely to do anything till Wednesday. Doesn't really help anybody at all, does it? So really all you're looking for at the moment is any range bound opportunities on lower time frames. So it's kind of a scalpy week, I suspect. But the only thing I'm really looking at as an opportunity today is this. So you've got two options on oil. You can either play a short now and assume that they're going to get this gap fill done very quickly. It's 150 ADR, can easily do this in a day, 2 days. Or we're just going to hover around as we have before and wait for a break to happen. So there is opportunity on oil. We will get some movement, I suspect, on this today. It is just breaking the Asian low. So you're just breaking through that Asian session low now. So it looks like it might be a good little short to start off with for today. But but I want to be positioned long on it. So not going to be taking it myself, but it does look pretty good for a short at the moment. DAX short break is underway. So yeah, I haven't really got anything to cover specifically today. So if there's any pairs specifically you want to have a look at, let me know. I will have a look at those. I'll cover all the positions that I'm in at the moment. Done 8% so far this month, well, 8% last week, basically, because it's second week of the month. So the month started very, very well, but it's an obviously catch up on last month, which was not good. So I'll go through the pairs that I'm in so we can see where everything's positioned. But obviously, there's nothing extended to have a look at anywhere at the moment. So it's just a case of waiting for something to kick in, which I suspect is going to be sort of midweek. So Aussie dollar Swiss, in that one, as you can see, we've gone sideways for 4 days and gapped down. I've got a long on this one. So that was the entry there, which was the H1. Can't see it because my head's in the way. That was the H1 RSI extension, 5-minute reversal entry, looking for a push up into the gap. So got a gap fill to the upside. Literally last week, we went sideways the entire week, nothing. So all we've done is we've gapped down. So suspect any of these gaps that are in play today, if you want to take some quick scalp opportunities, all these gaps are likely to get filled. If not today, at some point today, probably tomorrow. So there are gap fill opportunities if you want to take those. But yeah, so that's gone absolutely nowhere. Total sideways mess at the moment. We got the CAD Swiss. So CAD Swiss basically have one long on at the moment. Similar sort of thing. So I got out of the CAD Swiss shorts on Wednesday last week. So that was a nice little short play. Flipped long immediately on the same day because we were at H1 RSI extension. Sideways for 2 days. There's the massive whipsaw. So we're looking for that one to push back up into there. So one or two things is at play here. We're either going to pull back long, or we've got a structure break, pull back, go short. Either way, propulsion gap is my target. Euro CAD, that's in profit at the moment. I'm holding this. So the Canadian dollar last week, CAD did have a decent figure. So the CAD unemployment rate came out at 5.5. So it was 5.5 beforehand. They were anticipating their unemployment would go up. It didn't. So that's good for the Canadian dollar. So we had a nice, strong move on the CAD, and that actually held pretty well, even though the US unraveled. So again, got a gap down, unfortunately, this morning. So when we get back down into that low from Friday, which is this potential support resistance bounce there, we might get a little bit of a reaction. If we do, we're probably going to come up and do the gap fill. Canadian dollar, especially now with what's going on in Israel, if that conflict does spill out, oil prices are going to go through the roof. Obviously, Canadians export a lot of oil. So, yeah, CAD, very strong. Potentially, obviously, we don't know. It might all fizzle out. It's blown up and fizzled out many times before, these sorts of conflicts. It's like skirmishes, but this one does seem a lot more serious than the rest. So we'll see. But Euro CAD short, I'm holding that short at the moment for the propulsion gap fill. Pound odd. So short on this one. Again, this was an H1 M5 mean reversion from Monday last week. Was it Monday, Tuesday, Wednesday, Thursday? No, Tuesday last week. We haven't moved. So we came back down and tested that propulsion gap. I didn't exit. It wasn't enough profit. Looking for this one. So just hoping it's going to come down to there. There's no bias whatsoever on the pound odd at all. There's no reason to be buying or selling either of these at the minute. Just a load of rubbish. So, yeah, whoever powers up or weakens first, it will move. If it goes up, fine, I'll scale in. If it comes down, brilliant, we got a target. But nice big target on that one. Not expecting it to do much in either direction really at the moment. But we've got Bailey talking this week. So there is a potential for some movement on Friday. There's nothing Aussie based. and we've got GDP for the pound on Thursday. So the first opportunity for a decent move to start is Thursday for the pound. So nothing else. Pound US dollar. Obviously, we know all about this one. Still in it, still long. I got out of 2 positions on the news on Friday. So I took that one off and that one off. Market came down, added one of those back on again. At the moment, we're pulling down into propulsion gap. That area is holding like super solid at the moment. So we had that rally that started for a couple of days, and everyone was like, oh, finally, some weakness in the US dollar. And then obviously we had that big move down. So that reversal alert there pushed us back up above the monthly low. We sat there for 2 days, and then Friday, market pushed back down into support, retested this propulsion gap. They added a load more orders in. So this looks to me to be potentially the line in the sand that the banks and institutions are now like, right, okay, let's hold it here. Because we've tested it 3 times now. They cannot get through that level at all. Yeah. So they're adding new orders every time we get down to this level. We didn't manage to get a new high though. So what I'm looking for this week is pound US dollar to either confirm and make a new high, or to come and retest this level. This is all within 125 ADR. So, easily it's going to do this in a day and a half, couple of days, whatever. But we're going to need something to kick it off, and probably not today. So gap fill to upside today. We got propulsion here. This isn't really a propulsion gap. This is part of that V-shaped recovery from Friday. So down there, I'll be willing to look at adding another position in if we get there. But yeah, looking for it to make a decision, basically, the pound US. So once that high is broken, that confirms market structure long, and then we should be coming up into this propulsion gap. Then we'll see what happens when we get up there. New Zealand dollar Swiss. So sitting in this as well. Got into it last week. The week before last, got into this one. Added a second last week. It's not gone anywhere. I'm just sitting sideways on it at the moment. The Swiss franc at the moment is a little weak with the euro. We had obviously the interest rates changing on the Swiss franc, or not changing rather. They kept the interest rates frozen. So waiting for the next news event really to kick the Swissy into action. If we get a load of tensions exploding out of what's going on overseas, we will probably find money start to flow into the Swiss franc. It's a safe haven. So we tend to find a lot of money flows in there when the market is in trouble. We're in extreme fear mode at the moment. So there's a good chance that we'll get a power up on the Swiss franc, and obviously that's going to drive this one down. So I have no problems really having a short position on this. It's just not going anywhere at the moment. As you can see, all week we've just been sitting sideways. So in it, short, target on this one. I'm targeting the closest propulsion gap, but we've got, this is the interest rate announcement from the Swiss, where they kept the 1.75 instead of going up to 2. So that, I think, is a valid target. However, I don't really need to get all the way down there. So I'm just going to get out when we get down to there. So I'm looking for a break of this low this week, and then I'll be out. And then obviously it can do what the hell it likes from there. No catalysts on the New Zealand dollar this week. No catalysts on the Swiss franc or the euro this week. So there's, and we've got Lagarde speaking on Friday, but there's literally no euro news, no Swiss news, no New Zealand news, no Aussie news. It's all about the US dollar and the pound this week. Nothing but. So that's pushing up at the moment into that propulsion gap. So that gap fill's just done. US dollar Swiss. US dollar Swiss. I got US dollar CAD. I got out on Friday on the news. Target hit on the DAX. So there you go. So there's your 2R down, trailing the second position. $800 banked. Imagine all the indices are dropping. Yeah. Let's be careful today. Could have a big down day on our hands here. Just have a quick look at what oil's doing. Not a lot at the moment. yeah, so target hit. Nice easy opening range break today. Straight out the gates, straight down to target. Job done. US dollar Swiss. So again, Swiss franc. This one's in profit. Well, it looks like it's in profit, but it's not. So basically, propulsion gap fill is all I'm after on this. I'm toying with the idea of moving this one. Look at it on the big picture. This US dollar has been coming down against the Swiss franc while we've had US dollar strength as well, a lot of the time. So I get the feeling if we are going to see some weakness now starting to creep in this US dollar, they're going to need to put that money somewhere. I get the feeling as well, we've got Lagarde going to tell us that there's a good chance that we're going to get interest rate rises this week. So there's a good chance the euro might get a rally this week and the Swiss franc might get a rally as well. So if we get some negative news this week from the US dollar, I think there's a good chance we'll be sitting back down here kind of within a couple of weeks. So I was toying with the idea of moving this into a long-term hold because this position is kind of a longer one that sort of initially started back a couple of weeks ago. I like the idea of this coming all the way down. However, I get the feeling we might get some trouble here. So it's where I'm toying with the idea of just having this as a runner, basically, just to see how much I can get out of it. But at the moment, propulsion gap target is obviously where I'm looking for it to go, which is 125 ADR, easy to achieve in sort of a day or two. But you can see it's definitely topped out now. We've got the structure break, and Friday we took out the lows. Yeah, so we've now got that high, low, double top. There is a higher high technically, and now we've got a lower low. So we are really kind of in a little bit of an expanding wedge type kind of pattern at the moment. But that sort of movement, I suspect, is what we're going to see next, or we're just going to accumulate around here and then collapse on some news. So, which is more of what we're getting at the moment, sideways and then move, sideways, move, much less market structure at the moment because the market's just in fear of everything. It sneezes, it moves, and it goes quiet for weeks. So that's where I am with that one anyway. So I'm holding that one. And US dollar yen. So this is a speculative position, purely for no other reason than I'm looking for a follow through on this move from the Japanese or whoever instigated it. The propulsion move held on Friday. Whether that was them adding, it's very difficult to tell, obviously, because Friday was the news. So whether that was them adding to the position or it was just the position petering out, we don't know. But I'm looking for a continuation move down and a retest of that area. So I got out of 2 of them on Friday, made a nice profit with those. Holding the rest at the moment, looking for a push back down into here. I've got 3 positions on it, which were added over time, as you can see, but just waiting to see what happens with it. So I've got the short on. I'm waiting to see if we get any continuation move on this. If the US dollar rallies for any reason, the Japanese, as we know, aren't going to stand for that. It will come back down again. The difficulty we have is, are they going to do it from the 50 or the 52 level? So this is the last point we did the intervention at in October last year. This is where they said, do not push us above that level. This time they've been much more, do not push us. We're not talking about levels anymore. We're talking about volatility. So what we're looking for is a volatile move against the yen by the US. That is what will cause the second intervention to come if it's needed. I'm hoping that's enough. And we've got enough weakness coming through on US dollar news now that this will just start to peter out and start a move for the yen. But we will see. I'm happy to scale into it. Although I've got slightly larger lot sizing on than I wanted to have. I've also got another pending order sitting here in case there is a second intervention. This wasn't very big. This was only 4 ADR. Last one was 6. So there's much more movement than that available. So we'll see. So yeah, holding that. So there you go. That's my portfolio at the moment. Just sitting, waiting. Nothing's in any trouble whatsoever, apart from the pound US dollar. That has been in trouble for 2.5 months now. But anyway, just sitting on that, waiting. As we always are. So DAX move is kind of done. I'm out. So 1600 banked. Starting a little bit of a pullback now. So watch that propulsion gap. We've come out of this propulsion move here. So they've added back in from this level. Either going to do the gap fill now, or we're just going to pull back and run and retest the lows. So we'll see what happens, but I'm out. I'm done. I'm not going to trade the US this afternoon because they're shut. So yeah, that's it for indices today. Nice, easy, short on the DAX. There we go. That's everything covered. There's nothing else to look at. Boring, boring, boring. Bella, there is a gap on the DAX and gold. Do you think it will close today? Don't know. Could be, could not be. Everything in trading is binary. It will either go up or down. It will either fill the gap or it won't fill the gap. Your odds are 50-50. Some gaps fill, some gaps don't. Go and have a look through. There's one on the chart there, look, US dollar yen. Yeah. Did it fill? Yes. How long did it take? 3 days. It's very rare. If you look at the DAX, we're still waiting for a gap fill on the DAX from July. Hasn't filled. That's the first gap I've seen not fill. I wouldn't say ever, but in a very long time. This market isn't normal at the moment. But most gap fills, if you zoom into the chart, yeah, if you see the gap fills, yeah, there's one filled, not that day, second day. There's one, same day. There's one, same day. There's one, same day. There's one, same day. There's one, haven't filled it yet. There's one, 1, 2, 3, 3 days. Left a little gap, filled it same day. Gap, same day. Gap of that size, I would normally say yes, but that's what we thought about the other one. Look at the size of that gap there. Same day. So we pushed up, rejected, pulled back down. Pushed down, rejected. This is the long right now. If it is going to fill the gap, this is where it's going to do it from probably. But it's like everything, yeah? I mean, it's a very simple market. You're not going to get a reversal alert on this one because the open was, good 15, 20 minutes straight down. So the reversal alert's going to kick in there. That's going to show you for sure that we have got some good strength on side. So if we get this reversal alert, wait for a pullback. We shouldn't break that low. Yeah, if the structure is going to hold long, we should do that, shouldn't we? Yeah, low, high, higher, low. Off we go to a higher high to the gap fill. So wait for the reverse alert to kick in. Your choice is then either to take a trade there with a stop under there and a kind of 1 and a bit R, or you could wait for the reversal alert, wait for the pullback, get in somewhere around here, stop under there, and you're going to get a much nicer risk reward if you're using a stop loss, obviously. Or you can just get in now and go, looks like this is probably it. Stop under there and take it. Take a chance. But as long as that is bigger than that, you've got a chance of making money. Simple as that, isn't it? Really? Harold out the DAX. Good man. Morning, David. Henners, any news on the prop investigations? Nope. You won't hear anything on that for a month. Year, maybe. Maybe years. Don't know. It's going to... Basically, it's been investigated by the CFTC, and then it'll be investigated by the feds for fraud. how long does a court case take? 5 years, 10 years, next year? When will we get news? When they want to release it. Basically, my Forex funds is done. 90% of prop firms use the same model. Doesn't take a rocket scientist to find out, to work out that if you're putting money into these companies, 99% chance they're either going to rip you off and you're going to just keep giving them money, or they're all going to disappear. Some of them already are. Stay away. Stay away from prop for the minute. If you don't want to stay away from prop, carry on. It's your money at the end of the day. Personally, I've just put more money into my own account and I'm trading my own funds. It's safer. You don't know who's manipulating. The thing, my opinion on this is a little, not different, but I got a lot of money out of my Forex funds. Yeah, so I got paid by them regularly. So for it to happen, I'm like, I didn't experience it. Yeah, what they're saying is the guy had control of the prop firm, had control of the broker, therefore he had 100% control over price manipulation. That might be the case. In my experience, it wasn't, because I made money. Yes, I got stopped out sometimes when I thought that was a bit dicey, but 90% of the time I didn't have any problems. So I haven't had any problems with E8 ever either, but it doesn't mean I won't. So, if you can't afford your own funds, you haven't got a choice. If you can afford your own funds, my advice would be use your funds. Then you're never going to have a problem, are you? It's your money. Yeah. All brokers are brokers. All brokers manipulate spread. Nothing you can do about that. It's very easy to stop yourself being taken out by spread, isn't it? Don't put a stop loss in the market. You can't get spread. Very simple. But other than that, you just got to take a chance, haven't you? There's a load of prop firms that say they are different. Prove it. No. Okay, well then I'm not going to listen to you, yeah? I've asked FTMO outright on their forum, do you fund traders with live segregated funds? No answer. Skirt around the answer. Never actually say the words yes, which means no. Yeah. If you ask for proof of something and a company's legit, why wouldn't they prove it to you? Yeah. And FTMO is the one that everyone thinks is the best. It's the longest established. Been flying under the radar longer than everybody else has. I don't know. At least we knew outright from day one binary options was a scam and everyone still did it. This, taken one company to get caught to find out something's dodgy going on, isn't it? So we'll see. Morning, Keith. Kind of annoying. Not sure if I would start another valuation with someone else. If you're going to use anybody, I would use EA. This is the thing. I've got, obviously, on the website, the trader funding section. And I've considered taking this off the site, but when you look through these companies, yeah, people are having hideous problems being paid by Fidelcrest at the moment. But that was mainly because Deal stopped dealing with all prop firms. So the go-to way of getting paid by prop was Deal. Now what's happening with my Forex funds, Deal went, no, not dealing with any of you lot, you're all crooked. Immediately you assume the worst. So Deal pulled out. Then all of a sudden everybody was like, I can't get paid. So they've had to sort that out. CTI, really respect the owner of CTI, Daniel. Really good trader, good educator, runs the prop firm. As far as I'm aware, they're as legitimate as you can get. But the reason they're as legitimate as you can get is because their evaluation is awful. You've got to trade for 3 months to get past. It's, minimum of 20 days. So, this was the proper prop model. Yeah, you have to prove to us for 3 months you can do what you say you can do. And then we'll give you some money. Brilliant. That's what prop firms always used to be like. You used to have to audition for months. Then they came up with these quick models, not the direct because that's instant funding. But now they've got the challenge model, which is basically the same as the other prop firms. Is that segregated funds or not? Don't know. Fiverr's been around for a long time. Same model. Yeah, how many of these are legit? How many aren't? No one knows. We'll find out when they go bust or when they don't. It's your choice, isn't it? What about we open our own prop firm? Yeah, I can open a prop firm tomorrow, but I'll be using the same business model. I will be paying you with the funds that you all lose taking evaluations. That's how it works, yeah? I go, here you go, everybody, have a demo account for $500. I know for a fact 98% of you are going to fail the evaluation. So I'll take your 20 million and the 2% of you that get through and make 15 grand, I'll give you 15 grand of my 20 million. Thank you. That's the business model. Sell a demo account, use the money you get from selling demo accounts to pay some people that have a lucky streak. Same as casinos. Exactly the same business model. You walk into a casino with $200. They know that 95% of the people that walk in with $200 are going to walk out with zero. The ones that walk out with some are not going to be as much as the $200 we take off of everybody else. That's the business model. Yeah. Even a 1% edge on a 10 million or 20 million a month business model is a serious sum of cash. He took 300 million, $21 million a month on average he was taking out of people. And if you made 1% on it, he's a multimillionaire, isn't he? That's it. So I could start one up, but I'm not going to use a different business model because there isn't anybody out there that does. And if you ask them and they say they do, they can't prove it. Fivers have a good rep, Frank. Correct. So did FTMO. So does my Forex funds. They had a fantastic rep. I was in here pushing them for months. Why? Because they were paying me money. Yeah. I would do evaluations. I would get to a funded account. I would get my funded account to a stage where I could withdraw it. I would withdraw it and I would go, hey, I just made another 3, 5, whatever. Yeah. They had a really good reputation until they were potentially exposed as a fraud. So Fivers has got a great reputation right now, but are they a fraud? My Forex funds weren't a fraud until they were they? You know what I mean? The Fivers can't show you that they are actually doing what they say they're doing, funding you. But at the end of the day, it doesn't matter, does it? The question here is, where is your money safe, right? I couldn't give a monkey's what my Forex funds were doing. My Forex funds were basically a cash machine for me. That's it, right? So you put money in, 10K, yeah, take 10 evaluations. You get 3 of those over the line. Those 3 evaluations, you make more than 10K. You withdraw that money, you walk away, you've paid yourself. That's it, brilliant. If I put 100K into evaluations and got 6 to 8 accounts over the line, I would make more money. It's just a cash machine. You put cash in, you take cash out. All of these, you can do that with right now. Question is, when is it going to disappear? When are these all going to disappear? We didn't think that one was going to disappear, did we? Why won't these disappear? No one on the planet at the moment can tell me why these firms are not going to get a CFTC or an FCA or any other regulatory body in the country that they operate knocking on their door going, oi. No one can give me an answer to that question. Until they can, I'm not going to stick any more money into it. There's no point. I don't need to. That's my position. If you do need to, I couldn't tell you who's the good one, because none of them can prove to me that they're good. Everybody can have really good reviews on Trustpilot. My Forex fund had loads of them. You saw me in here passing evaluations and making money with them. It's just, but that doesn't change the fact that it was against some kind of regulation somewhere. The whole industry is unregulated. So we'll see. But there's a company that I started looking into. Surge Trader, Funder Pro. Can't type Funder Pro, but these guys were recommended to me, Funder Pro, as about being different. Good corporate website, guys. I want to take people to your corporate site rather than your login screen from your ads. Yeah, they have sponsorship on cars. And things, so did my Forex funds. They were all over the place advertising. Does it mean that they are legit because they have a Formula One car on there? A lot of brokers that went bust have done the same thing. They've sponsored football teams, then been slapped across the wrist by regulatory bodies for doing things naughtily. Yeah, it happens everywhere, doesn't it? So yeah, I mean, these guys basically I've been recommended as being brilliant. They do definitely fund you, but the guy that owns this company also owns the brokerage. It's the same thing. Just that they're not in America, so therefore the CFTC can't touch them, but somebody can touch them. There is a regulator in every country. Where are they based? Limited. So they're based in the UK by the looks of things. Oh no, Malta. Yeah. So, you know, Maltese will get in touch with them, their regulatory body, and they'll be next. I don't know. FTX also sponsored F1 Mercedes. Yeah, I mean, it doesn't matter, does it? Of course they can sponsor Formula One teams. They're taking 300 million out of you. Yes, I'll put some money into marketing. I'm just, you know, I'm sure there's a lot of good ones out there, and I'm sure there's a lot that won't disappear. But, you know, you got to flip a coin as to which one you're going to pick, haven't you? That's the trouble. A minute, and we don't know. DAX is pulling back. So potential here for an entry out of this propulsion gap. If it's going to go long gap fill, if we get a bullish move out of this propulsion gap, there's your W pattern reversal before the reversal alert triggers. If it pushes down below there, watch the lows from last week. Right, that's all I've got for you today. Nobody wants to look at any FX pairs either, which is weird. But I've covered everything, obviously, that I'm in. There's no RSIs to look at. There's no ADRs to look at. So that's kind of it for today, really. So watch this level on the DAX. Trailing that, watch that level, which is beyond ADR. This would be probably the best spot for a bounce back up to gap fill today, but the easiest to trade anyway. Swiss yen, want to have a look at Swiss yen? Look at that. So that's coming down nicely at the moment. Yen strength coming through. Look, everything's coming down against the yen, apart from the US dollar. So we've got US dollar strength and yen strength so far today. So Swiss yen's coming down nicely. That's a double top from last week. So yeah, out of propulsion. So this is the Swiss bank changing keeping the interest rates as they are, and then moving down. So yeah, it looks like a good short. I wouldn't be looking to long anything against the yen. Just shorting everything against the yen at the moment until we know what's happening with the intervention side of things. Jerry, Axie has a funded program. It's not really a funded program. What Axie does is different. That's more of an investment thing. So Axie's prop model. It's not a prop firm, basically. It's can't even find it. It's called Axie Select or something, isn't it? I can't remember, but it's not a prop firm. They will put you on there. Yeah, Axie Select. Kind of a copy trade thing. There you go. Can't remember how it works. There you go. So basically, put $500 into our brokerage. Yeah. Trade with a system or strategy that we think is workable. Yeah. So achieve an edge score. i.e. take minimum of 20 trades, and they will have to have a positive risk reward. You can't make all of the money. You can't make more than X money within a certain period of time. There's all sorts of rules going on under the hood here. And then, yeah, brilliant, excellent. Now, increase your account, do a little bit better, and we'll give you some funding. So you have to deposit this into the brokerage, yeah, and they will increase your leverage for you. Not a prop model. It's sounds like a prop model, but it's not. I've looked into it before. There's lots of companies that do similar sorts of things. So obviously Darwin X is the obvious one. Darwin X is the biggest in the world. This sort of model. So you set up an account, deposit some funds, you create a Darwin, and then they will evaluate your trading. And if your trading looks like it has a long-term edge, they will consider you for funding in somewhere in the region of 8 to 12 months with maybe 20, 30 grand, which you will earn about 5% out of. And then if you're really good over a year or so, they'll put some serious funding into you. And that's when you start earning money. Why not do it with your own funds if you're that good? Yeah, it's not the same model. If you read through it, a different thing. Aussie dollar CAD. Not really going anywhere at the moment. Gap fill again. Look, lots of gaps everywhere today. So just, there's a good chance a lot of these gaps are going to get done today. So potentially a little long today, but I'm not expecting anything to go anywhere until Wednesday. So Canadian dollar, obviously, you want to be shorting everything against the CAD with the current oil situation. So we've obviously gapped up on oil. So if that gap fill happens, it will weaken the Canadian dollar temporarily. But once that gap fill's done, we should get a rally. If the trouble expands, obviously oil is going to increase in price and Canadian dollar will rally with that. So again, everything against the yen, I'd be shorting. Everything against the CAD, I'd be shorting at the minute, just from fundamental perspective. There's no setups at the moment. I'm not getting in for the sake of getting in. I'm getting in when there's some kind of setup to get me in. So I'd be much more interested in shorts than longs. Good short on this one would be the gap fill. So this propulsion gap, not really a propulsion gap, this like sort of end of this V-shaped recovery move that we had on Friday. Once we get back up into there, that's a good short out of there. So drop down M15 or M5, wait for the reverse alert to kick in when we're up in this area here, and then take that as a short. If prop firms are dead, but I want a career trading and don't have a lot of capital, what would you suggest? You can't. It's like saying, I want to become a pilot, a fighter pilot, but I'm short-sighted. You can't. Not being funny, but if you haven't got any money, you can't trade, can you? And if you haven't got any money, prop firms are not the way to go necessarily. If you want to make long-term, if you want to make this a career, you can't make a career out of prop. Well, you probably could. You'd have to be good, but yeah, you need money. I've used this analogy before, Henners, right? You're looking to become a career trader, yeah? So it's exactly the same as saying, I want to open a coffee shop, or I want to start a business as a web designer, or I want to do X, yeah? If you're going to start your own business, you need capital. You can't do it without it. If you want to buy a shop, you've got to get a lease on premises. You've got to fit your shop out. You've got to put stock in it. You've got to staff it. You've got to put alarm systems up. All costs money. Yeah. If you want to retrain to become a pilot, it's going to cost you 100 grand. If you want to set up as a web designer, you're going to need to buy decent equipment, computers, monitors. You're probably going to need an office. You're going to need to market yourself, which is going to cost you £2,000-3,000 a month. Yeah, you need capital. If you want to become a trader, you need capital. If you haven't got capital, you can't become a trader. Simple as that. All the Lamborghini crowd will tell you you can, but you can't. Because all the Lamborghini crowd are earning money out of YouTube revenue, not out of trading. Can you please clarify why big gap down on the open of the indices doesn't mean more likely a continuation down day rather than a reverse gap fill? I'm not saying that, Thought Feeder. When did I say that? Go and look through gap fills. Go and look through gap down. I've just been through it. Yeah, on the DAX. I just showed you on the DAX. Doesn't mean, because there's a gap, doesn't mean it's going to fill. Yeah, today, look. Gap down. Whoops. Gap down. Didn't fill. Gap down. Filled 3 days later. Gap up. Filled same day. Gap down. Filled immediately. Gap up. 2 days. Gap down. Filled immediately. Gap down. Filled immediately. Gap up. Filled immediately. Yeah. It will either run away from it for a bit and then come back and fill it, or it will fill it straight away. I don't know which it's going to do. I have no idea. Go and look at previous gap days. Just go back through your charts. It's very simple. It takes 2 seconds. Look. The gaps, yeah. Gap filled. Gap filled. Gap filled. Gap not filled that day. Filled the next day. Massive gap. Not come back to it yet. Massive gap. Not come back to it yet. What have we got today? Massive gap. I've no idea if it's going to come back to it or not. I haven't got enough data. Massive gap. 1, 2, 3, 4 days to fill. 5 days to fill that one. 1, 2, 3, 4 days to fill that one. 1, 2, 3 days, maybe 4 days to fill that one. Filled same day. I don't know. It's a 50-50 shot. It's either going to fill it or it's not. It's binary. What do I think about Samuel & Co? I don't know. No, I don't know who they are. They're probably another prop firm. What do you think about them? Guys, I don't know. Do you want to give somebody $500 for a demo account in the hope that they might give you some of that money back if you can hold a winning streak for 3 to 4 weeks? If the answer is yes, pick one at random. It doesn't matter, does it? It's a prop firm. Samuel & Co, FTMO, Funder Pro, True Forex Funds, Surge Trader, CTI. Pick one. They're all the same. They sell demo accounts. If you're good and you meet their rules, they will give you some of the money back if you can hold an account long enough to get through to a point where you don't break a rule. Yeah. Doesn't matter which one you pick, does it? They're all the same. There's Darwin X0 now, which gets you funded much faster. Is it? I haven't looked at that. Certify your track record. Yeah, so this is how's this different to Darwin X? Normal Darwin X, Darwin's. Because this looks pretty much the same. You know, with normal Darwin's, you need to wait somewhere in the region of usually 6 to 12 months before you get any funding that will actually make you any amount of money, and even then, it's way less than you could actually make yourself. It's only when you get to this stage where they suddenly start putting 100 grand, 200 grand in investors. It's basically all Darwin X is it's a broker at the end of the day, but the Darwins are crowdfunding. It's crowdfunding for investors. So I'm an investor with 20 million in my account, right? I need to make sure that I get a good return on my investment. I'm going to diversify my 20 million into multiple traders. Yeah. So I go onto DarwinX and look at their Darwins. I can see there are 1,000 Darwins on there. The top 20 over the last 18 months have returned a positive return on investment of somewhere in the region of 1 to 3% per month, every single month. So I get my 20 million and I give $1 million to him, $1 million to him, $1 million to him, $1 million to him, $1 million to him. Yeah. So I'm crowdfunding good, successful traders, which aren't traders, they're established trading companies. And I'm basically doing that. That's basically how it works. So what you are one of those. I am me sitting here with my trading account trading away. If, however, I return anything above 5% a month in profits, I'm too high risk for the big money. Big money is not going to put money into something that gives them a 50. Think about it. If you go and invest anywhere, if they were to turn around and say, I'll give you a 50% annual return, immediately as an investor, you'd be like, it's all 50%. How? No one can return 50% a year. Doesn't happen, right? Warren Buffett doesn't return anywhere near that. He doesn't even return 20% a year. Biggest, most successful investor on the planet. Right? These guys are not looking for that. So if you're trading and you're looking to get a 5, 10, 15, 20%, you're high risk. I'm high risk. I totally admit it. Yeah, returning 15 to 25% a month, huge risk. Huge. Look at that with the pound US dollar. Huge risk. Investors aren't even willing to look at you, let alone analyze anything. Darwin does all this for you. So all this is you fund a Darwin account. This is a broker. You deposit money in the broker and you trade with it. They will evaluate you and there will be multiple criteria and you will get given a Darwin score, a score basically, which is how risky you are, how many trades you take. They'll look at every facet of your trading in minute detail. And then they will give a score, which the investors then go, give me the highest scores. I'll put my money there. So this is what this is. However this looks like to me, I don't know, I haven't looked into it in detail. This is probably Darwin investing their own money, their own capital in you, which is great. But that's not fast track, is it? 6 months. CTI will do it in less. City Traders Imperium. They're a prop firm. Look, 770% return since 2015. 2015. You need serious long term. I don't know. I'll look into it. I haven't. I'll bookmark it. I'll have a look at that one and see what it's like. But it's not a prop firm. Oh, it's a virtual account. Oh, okay. So right. So the only way this differs from normal DarwinX, yeah, with DarwinX you have to put your money in a. You don't actually have to, but you can run it off a demo account, can't you? I think. Not sure. But you don't seem to have to fund that one. Zero calibration. I don't even know what that means. It's all a bit complicated, isn't it? I'll have a read up. But yeah, long term, if you want to make money long term as a trader, so going back to your question that you asked, Hennas, maybe DarwinX is the way forward. But you know, you're looking at, you'll be able to leave your job maybe in 18 months type of thing, not get funded straight away sort of thing. What are your thoughts on take it private equity from people to trade? I've been offered quite a bit recently, haven't decided. Friends and family, don't do that. If you want to fall out with your friends and family, that's the best way to do it. Money. Anything to do with money, with friends and family, immediate arguments. I don't know. I can't offer any advice on investments or anything like that. I don't do it. I'm not qualified. I'm basically a computer programmer who's been trading for 15 years, who's made it all up himself. Yeah. I've never been trained by anybody. I know nothing about anything. Everything I know is about experience. I'm what's called a QBE. I'm qualified by experience. I've been doing this a long time. I've seen everything. I've been everywhere. I've done everything. And I do what I do now because I know how the thing works. Yeah. How you fund yourself is up to you. Yeah. People could go off and put 25 grand on a credit card. They could go and get a bank loan. They could go and beg and steal and borrow from their friends and family, or they could get an inheritance and use all of that. You could sell your company. There's millions of ways to get money, isn't there? But at the end of the day, every single cent you place in a broker account is at risk. Every single cent. And look at the statistics. Not Darwin X, I'll use Axie as an example. Yeah, look at the statistics. 75.5% of retail investor accounts lose money when trading. This is incredibly low. Most brokers, you're looking at 80, 85% plus. Where's their risk statement? That's naughty. Oh, this is the global. I won't use IC markets then. But look at any other broker. You'll find it's normally up in the 80s. 70%. Wow, everybody's doing really well at the moment. Look. This is they update. They have to by law update this on a. I think it's a quarterly basis. Every 3 months they have to update that. Everybody's doing pretty well at the moment. Look, 70, 75. Who else we got? Darwin X. See what Darwin X are quoting now. 60, even better. You reckon everyone's given up trading and we're just left with the big boys now? Maybe that's why these numbers are going down. It was up at 80s, wasn't it? First we got IG. IG are always good. They're doing IGV. What the hell's that? Why Clash of Clans accounts? Pass. IG 68. They're all below 70. Wow, that is a shocker. We're obviously all getting a bit better, aren't we? Or everyone's just giving up and doing something else. But yeah, so, just bear in mind, if you make money in this industry, you are in a very, 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 very small minority. We are holding the lows. We haven't made a high, though, so we are in a symmetrical triangle break at the moment. But is that actually filling the gap or just price moving around when it happens to go back? Thought feeder, think about what you're saying. It is filling the gap, isn't it? Otherwise, it wouldn't have filled the gap. Are you asking why it happens? I don't know. I don't know why it happens. It just does. There's a lot of speculation as to why it happens. Most of it seems to be the unfinished business, which is the terminology used for participants caught offside. Yeah. So if you're a bank and an institution and you were long on Friday, you are now underwater. You will get your market maker desk and your corporate desk to force the price back to equal your unfinished business. Yeah. That's the theory I think is the most likely, because I know people in the banking system and I know how the desks interact. So that's what I think is probably the most reasonable. But it doesn't matter, does it? Why? What matters is it does. Yeah. Why do planes stay in the air? I don't know. I don't understand how you can get multiple tons of metal to float along. Why do huge ocean-going container ships float? I know that if I get a nail and drop it in a bowl of water, it sinks. Those things are way heavier than a nail. I don't get it. I to do with water displacement and stuff. I know I kind of do get it, but I don't need to know why. I don't need to understand the mechanics of why a boat can get from over there to over here with so much weight. What I need to know that is that it can, and it does. Yeah. So why do these gaps fill? Doesn't matter what you think, whether you're a conspiracy theorist, whether you think it's to do with banks, whether you think it's to do with whatever. The fact of the matter is it's proven in history they do all the time. Yeah. Look at the DAX, right? Don't try and unpick the reason. Look at the DAX. If I zoom out on the hourly chart, every single gap, every single one gets filled. Every single one. Yeah. Look at that gap there. Bang. Done it. Bang. Down. Gap there. Gap there. Bang. Filled. Gap there. Not filled. First one I've seen, as I said, in a long time where we haven't filled it. Are these getting filled just because price is going up and down and it's completely accidental? I have no idea. Are they getting filled because the banks or institutions are driving price back there? I have no idea. Does it matter? I don't think it does. But is it going to do it today? Is it going to do it on Wednesday? Is it going to do it some point next week? I don't know. So your job is, if you want to build a strategy based on anything in this market, anything at all, your job is to find a strategy that will make your account survive for the trade to play out. So if you want to take longs to fill that gap, you've got two choices now. You can either get in now and then get in again later today, or get in again tomorrow morning and hope that it does it at some point this week. If it continues to push down, you could get in again and wait for it to do it next week. Or you could say, I'm going to use a stop loss. I'm going to wait for bullish price action, and then I'm going to jump in with a stop loss, and I'm going to go for the gap fill today. Yeah. If you get stopped out, you're going to need to have another go at the gap fill later today or tomorrow. You just need a strategy. Yeah. We have all a gap is a target. In the same way as it's a target on anything else. Yes. So if you look at anything, right, on this thing right now, there's a propulsion gap target there. When's it going to get there? I don't know, but I know it will at some point, because that's what the market does. It fills gaps. We know that. This is why I've got this indicator on my chart. All these gaps that are filled. Are these getting filled because price is just moving up and down and eventually will always get to the place it's been before? Or are they getting filled because market's driving back there to complete unfinished business, or retest and add into positions they already have running? Does it matter? No. What matters is gaps get filled. So all you need is a strategy to allow you to take advantage of that fact. So if I'm going short here and I'm expecting it to come and fill that gap and it doesn't, what I can do is I can just keep going short until it does. Why? Because that's what it's always done in the past. Why? I don't know. Doesn't matter, does it? Yeah. Look at this one. This is a really good example on the screen here. Look. We put in a gap there. Yeah. So I went long. And it didn't go back. It carried on going down. So I went long again. It didn't go back. So I carried on down. I went long again. Didn't go back. So I went long again. Didn't go back. So I went long again. Oh, now it started to go back. It got there. What's the plan? Wait until it gets there. Why? Because that's what it always does. But why? Who cares? I don't care. Where's it going? Down here. Why? I don't know, but it will. And if it doesn't, it will push up and then it will come back to this one. And if it doesn't, it will push up and it will come back to this one. This is what gaps are all about, propulsion gaps specifically. They're a target because they're large orders placed by the banks and institutions. The if, the why, and the when price comes back to retest them is irrelevant. I couldn't care less. What I can see on the chart is that that is what happens all the time. So what I do is I target them. If it doesn't come back to this one, so let's use this one as an example, yeah? So there's a gap that was placed. It pushed down, and let's say we didn't get out on that one and it pushed down further. I would enter another position there, and instead of targeting this gap, I'll move my target to this one because this is closer. And then it pushed down further and I went, oh, okay, well, I won't target that one anymore either. I'll target that one because that one gets me out with a profit. And then it pushed down a bit further and I was like, all right, well, I won't target that one. I'll target this one. Okay, next. And then it came up and hit that one. I'm like, right, brilliant, I'm out. All you do is you adjust this price as a target. So this gap rather. Whys, whens, hows, mechanisms. You can make up theories that after X number of days, price will always revert because it's the X day in the week. The moon's up there, and it's only a crescent, and there's a wolf howling over there, and my wife tripped over, then my son tripped over, so something else is going to trip over in a minute, which means it's going to make up any excuse you like. Just know that it happens. That's all you need to worry about. Yeah, stop. Everybody's trying to find something to make them 100% infallible. Stop it. You can't. You just don't know. It's just going to happen at some point. The gap is going to get filled on the DAX. It could get filled. We'll be talking about this tomorrow, and I'll come on tomorrow morning and go, gap fill filled yesterday. Look. Or I'll come on tomorrow and go, that gap fill's still in play. It's going to go up at some point. One of those two things is going to happen. I'm either going to come on tomorrow morning and talk about the gap fill, or I'm going to come on tomorrow morning and talk about the fact that there's a gap to be filled. I don't know which it will be. This is why I position trade, because I don't know. Neither do you, neither do the banks. So if you don't know, I don't know, and the banks don't know, how are you ever going to find a strategy that's going to give you any indication of what you should be doing right now? This is going up or down today. I couldn't tell you which. It may not actually do anything. It might just go into rotation and sit here the entire day, which is a high likelihood. I don't care. I've made my money. Sorry, I can't be any more accurate, but you can keep looking for it, but you'll never find it. I click the like button. Good man dances. Thank you for that. Ryan, I bought your ADR reversal indicator. I'm looking to trade weekly and monthly ranges for swings. Do you think the 10 period will be compatible? I don't know. I don't trade that way. ADR for me is an intraday indicator. It's there to show you how far something's going to move in the middle of the day. I don't know how you would use it to trade weekly and monthly ranges. I don't know. ADR is literally just a measurement of the average movement of an instrument over a period of time. It's ATR, but for the daily. So what we're looking at is ADR low and high is on average the maximum we get to. That's all it is. It's designed to show you potential exhaustion, or it's designed to show you good areas you should get out of your trades, because 58% of the time the market stays within it, and when it gets to it, it usually falters. Unless there's a news event, which means it will just do whatever the hell it likes anyway. So I don't know how you would use ADR on a swing basis, because all it's showing you is what is the average, what are the chances of the average daily range of movement today. It doesn't tell you anything outside of today. Yeah, so there's a 58% chance price will do this today. Yeah, there's a 42% chance it will get to that level. There's a 23% chance it will get to that level. There's a 12% chance it will get to that level. What it will do when it gets to them, I couldn't tell you. It could reverse or it could just sit there. But those are the odds of price extending to those levels, because that's what it does. Again, why is, you know, this is the whole thing. I think this is part of the hunt for the Holy Grail, isn't it? This is why we all hunt for that indicator or that system, and why we never find it, because we are logical human beings and there has to be a reason. No, there doesn't have to be a reason. Why can't we be content with it just does? Yeah. People say to me, but those figures, surely they're going to change over time. Yes, that might become a 24 or a 22 or something if I redo my 15 years worth of or 25 years worth of analysis again now, because I did this analysis 3 years ago. So yes, might be 22.7 now, or it might be 26. I don't know, but I don't care. What I know is that price just moves within a range. Again, people ask me why, and the reason is, I think, because the banks and institutions have an infinite amount of money they can trade. You've got three key desks in a bank. You've got the corporate desk, the market maker desk, and the speculative desk or prop desk. The corporate desk just presses buttons because companies have asked them to. The market maker desk helps the market get orders filled because the corporates and the bank have asked them to do it. The speculative desk is there purely to make money. Yeah. So if you have a bank which has 100,000 customers, those 100,000 customers are all going to do transactions. On average, they will do X amount of transactions in a day, which means on average, you will see a movement in a day. Sometimes there will be a large news event which shifts the fundamentals, which means that the banks and institutions have to execute more orders because pension funds decide to change their portfolio. I want to now buy more euro and have less pound in my portfolio because of the fundamental shift. The speculative desks will start longer positions over 3 to 6 months on this because the fundamental has shifted. So on those days, what you tend to find is price will suddenly hit 175 ADR. Not because of any other reason than there's more money wanting to do this thing today. But this is only today, and next day we will move back to normal stuff. Everyday business. Can you exchange this for my holiday, please? Can you do this, that, and the other? That's what I think the why is. I don't know. How could I? Who's going to tell me? No one, because nobody knows, do they? So we're hunting for some reason for everything. But what you should be doing when you're trading is looking for what happens. The reason is irrelevant. Price spends 80% of its time in a range. Why? I don't know. It just does. This is why I have identified that trends trading and breakout trading are the least profitable, because 80% of the time that's not what it does. So become a mean reversion trader, because 80% of the time you've got an opportunity to make money. Why? I don't know. Why does it fill these gaps in? I don't know. It just does. So if it keeps doing it, I know where it's going, don't I? Where's it going? It's going down. Why? Because there's gaps to the downside and there isn't any to the upside. But what if it pushes up there and makes another gap down there? Well, then it's going to come down to this one, isn't it? What if it pushes down really hard down to here all of a sudden and leaves a gap here? Well, I buy it because it's probably going to go up. Why? I don't know. It's just what it does. I can't answer the questions because I don't know. No one does. But we as human beings need these questions answered. So we make up all these things like the interbank price delivery algorithm. No, it doesn't exist. We just make it up because we need a reason. So let's give people a reason. Let's make something up. That's what we do, isn't it? Anyway, I'm going into waffle because there's nothing. The markets are crap. There's nothing going on, is there? I'm just going to waffle all morning now. I'm pretty sure Darwin X0 has like a 1 to 10 max leverage. Right. Oh, well, that's going to be pretty hard to work with, isn't it? Yeah, I mean, and I understand why they do that, because the idea is they want high performing investment vehicles. This is the thing. They want, think of yourself and everybody that's in a Darwin as a very small hedge fund or very small pension fund, a very small investment bank. They want people that are going to continuously return a little bit of cash. Yeah. That's what they're after. If I put $1 million in there, I want to make sure I get more than $1 million back. I don't want you giving me less than $1 million back. Yeah. Are you high risk in any way, shape or form? No, you have $1 million. That's what they're after. 3% return, 2% return, 2% return. That's why they've given them 275 grand, 350 grand and 500 grand, because they're pretty damn safe. Yeah. Look at Lee down there. What's he done this month? 8% last week. Piss off. Not interested. Fine. But I'm not looking to be a long-term attractor of huge amounts of money, am I? My money. I need to pay the mortgage. Slightly different business model. Darwin X0 has a subscription model. You pay monthly, and as long as your score is above a certain level, you get funded. Oh, right. Okay. Yeah. So they're basically asking you to be consistent, aren't they? I'll have a read up on it. At the end of the day, the reason we trade is to make money. Yeah. So if this thing here that we're looking at on the screen, right, cannot produce 5K that I can withdraw every month, it's not of any interest to me because I have bills to pay. I've got to pay the bills. So if I can, after 3 months of successful trading, their scoring system will allocate enough money to me that I can get that out, I'm interested. Otherwise, I'm not interested because I need to pay the bills. This is the whole reason you do trading. I trade so that I don't have to sit in front of a computer all day long and work for somebody else. I trade because I want financial freedom and enough money to have a nice life. If they can't give me that, or it's too hard to do it, it's not for me. But it might be for you or for someone else. Everybody's different, aren't they? Some people only need to earn a couple of grand a month or a grand a month or something like that. And it's, yeah, you could probably do it, couldn't you? Everyone's different. Poorer countries, they could probably earn $200 a month and be absolutely loaded. I don't know. It's not in the UK. We're the most taxed people in the universe. Dynex Zero, you get 75 min score. You are guaranteed 25k monthly. The 25 is cumulative for 3 months, meaning by the 3rd month, you have a minimum of 75 and 250k max. Okay. So, yeah, you've got to basically prove for 3 months that you're consistent to be able to get the money that you could get in 24 hours with E8. E8, I can be funded this afternoon with 100k. But what are what are the rules? I have to look at the rules. I don't know what the rules are. Can't really comment on it because I don't know what the rules are. But how do you get the score? What is the score made up of? That's what we need to find out. I'll have a look at it. Leverage is crap, yeah. He's flipping Clash of Clans accounts on his spare time. Oh, yes. Yeah, so I think that's where look, this. I was looking, I've got a Clash of Clans. I used to play Clash of Clans years and years ago. And I think it was on a Discord channel. And somebody posted they had an account for sale. And I was like, what? Didn't even know it's a thing. So I Googled, this is what this was. So I Googled basically how to sell your Clash of Clans account. I was like, oh, is it worth any money? I was like, $78. So I would play Clash of Clans for years. I've got a Town Hall 14 or something. I don't even know what it was when I finished playing, but I was like, oh, if it's worth some money, I might just flog it. $22. Like, I can't even bother to look into it for $22. Waste of time. That's what that was. That's why I completely forgot about it, because it was like, it's not worth entering my brain to even look into any further. It's not enough money. Air displacement, Rajiv. Yeah, we're talking about boats. Sky hooks. Don't know what that is, David, but what causes the triangle and flags to form? Price contraction. So you've got symmetrical triangle formation right now on the DAX, yeah? What's caused it? Price isn't going up and down. Why? I don't know. It's just not. Don't need to know, do you, Hennes? What caused that symmetrical triangle? What caused that flag? I don't know. And again, flag breaks, yeah? One of the most traded flag patterns. One of the most traded patterns in the world. What's the odds of a flag break, pattern break? 50-50. Is it going to break up or down from there? I don't know. What I do know is a load of people got killed on Friday trying to trade the flag break long on the US dollar. So we had the flagpole, we had the flag, and we got killed because the flag break long failed. Sometimes flag breaks long work. The odds are 50-50. Funnily enough. Why do they form? Well, I mean, obviously the logic behind it is it's a propulsion move, yeah, which is a large batch of orders being executed at the same time, and then exhaustion because they've stopped executing that batch of orders. Therefore, you go back to a normal price action. So what you do, all a flag break is the price action you had before the propulsion move returns. That's all it is. Exhaustion, less orders. 95% of us here are here for the rants. Yeah. Boring. It's boring, isn't it? Trading's boring. It really is boring. I come in here every day and I do the same bloody thing. I go, right, let's have a look at the average daily. Nothing's hit that yet. Nothing's hit the weeklies. If something has hit the weeklies, that's probably going to pull back the other way. There's nothing extended on RSI. If there is something extended on RSI, you can probably take it back the other way. The DAX is opened. Let's see which it breaks to the upside or the downside. Oh, it's breaking to the downside. It's made me a load of money. Excellent. That's as exciting as it gets. All these people out there selling you their Lambos and all that sort of crap. They can get, trying to make something exciting that really isn't. I'm sitting here doing nothing all day today because there will be nothing to do. I'll be watching my P&L probably flick from somewhere between 5 to 8% all day. And probably tomorrow I'll be watching the same thing. And then Israel will accidentally shoot a rocket at the USS whatever that's sitting off the coast. And a Russian jet will be scrambled and then the market will go like that. Until something happens. This is why every morning we do this, because this is what moves the market. The market doesn't do anything until it knows what it needs to do. This tells the market what to do. So the market moves on this. And until we get this, we don't do anything. So 90% of your job is sitting here going, no news till Wednesday. I might as well go off and do something else for 2 days. Because this P&L is not going to get any bigger or smaller within any shape or form that is going to make me want to do anything exciting for 2 days. Because there is nothing to move the market. So you just have to sit here and rant about other crap. Can you explain the inside bar? Inside bar comments. We are looking for basic breakout of the squeeze. Yeah, so an inside bar, just don't want to get bored listening to Al Brooks. At least I get to the point. That's a good point. I could sum up ICT's entire course in probably 10 minutes. Don't do it. All an inside bar is an expansion in price followed by a contraction in price. Yeah. So if you've got a candlestick like that, an inside bar means that, so all a candlestick, you have to start with a candlestick, right? A candlestick is a representation of price over time. That candlestick appears on every single time frame because all it is doing is telling you that we opened here, the price pushed down, it then pushed up and closed higher than it opened, yeah, which means that the sellers tried to make a move to the downside, were unsuccessful, and the buyers, over the period of time, I don't know what this is, 5, 1 minute, an hour, 60 year, it could be any period of time, but all it's doing is telling you that during the period of time you're looking at for that thing to have drawn on your chart and close, the buyers were more prevalent than the sellers. That's literally all it does. Yeah. So you look at it here and you go, that's bullish. Yeah. So this is bullish, isn't it? Because that's a big bull candlestick. That's a big bull candlestick. This one they've pushed down and they've pushed up again. So it's a big bull candlestick. Yeah. Is this bullish? Christ, no. It's bearish, bearish, bearish. Yeah. See the difference? I look at it on this and I'm selling it. I look at it on this and I'm buying it. So all it is, a candlestick, is a representation of what has happened over a period of time. So when you have a large move in one direction, right? So let's say this is a bull candle. It means that the bulls were in charge. If the next candle does not break the high or the low of that candle, it means that the bulls lost control because they couldn't go further. So we know that they're in control, but we don't know who is going to be in control next. So if you then get another candle that goes like that, inside of that candle, we're in the same situation. Yeah, the bulls took control there, but they couldn't get any further. So what does this mean is going to happen next? No idea. We're stuck now, and no one's got control of the market. So what's going to happen next? Someone is going to take control of the market. So if you place an order here, and you place an order here, there's a good chance that when that someone takes control of the market, you can get on board with them. So all inside bars tell you is that we're unsure which way we're going next. All right? So wait until someone makes a move. And then what will happen? That or that. The odds are the same. It's either going to be a false breakout or it's going to be a breakout. But what it does, an inside bar, is it gives you a setup. And all a setup is a set of conditions in the market that basically give you an opportunity to take a trade. That setup, an inside bar, has no more success rate than any other candlestick pattern or any other system or strategy on the planet. Because when that setup forms and you take a break of either the inside bar or the outside bar setup, the odds are the same. It will either work or it won't. The thing that makes you successful at trading inside bars is whether or not, when you get one that works, you place your TP further away than your stop. If you do that on an inside bar setup and more than half of them work, you're a profitable trader. The inside bar setup on itself has absolutely nothing to do with what is happening in the market when you take that trade. It's telling you what has happened over the last 2 periods of time, but that has nothing to do with whether or not Barclays hit the button to buy on a 25 million order now on the instrument that you're staring at. That is what's going to make the market move on the next candle. These previous two have got nothing to do with it. Which is why when people come and say to me, you need to make your opening range breakout EA better, it doesn't take any account of what's happened previously. It doesn't take account of the trend. It doesn't look at the previous day's candles. It's rubbish. Yeah. What's that got to do with anything? What happened on Friday has got absolutely nothing to do with the movement on the DAX today. I made money on the DAX today because the momentum broke short and I went with it. And I took it and I made it. And I was sitting here with $1,600 in my bank account. Why? Because it was a bull day on Friday. You telling me I should have gone long? Why? But it went down. Well, yeah, but it was a bull day, which means it's going up. Why? No, it went up on Friday. Yeah. It was really sunny yesterday. Is it going to rain today? I don't know. But the fact that it was sunny yesterday has got nothing to do with whether it's going to rain today, is it? Today's different clouds. Today's different price action. Today there's different news. Today, compared to Friday, we didn't have a new war kicking off in Israel. Don't pay any attention to anything that's happened in the past, unless you're looking for clues to repetitive cycles, propulsion gap fills in general. Yeah, we know that they happen over and over and over and over again. Pay attention to those. I mean, it's just, which way is this going? I don't know, but it's more likely it's going to go up there because we got all these gaps here in the same way as we had all these gaps here when it came down. Is it going up there to fill the gaps? I don't know, but it's what it does, isn't it? It goes up after it's gone down. Why? Who cares? There you go. That's an inside bar setup. All it is a setup. Everything is a setup. Well, I talk about 3-bar. My favorite candlestick pattern is a 3-bar reversal. And basically 3-bar reversals are reversal patterns. So there's one on the chart here. Beautiful 3-bar reversal. Push, pause, pull. Did it work? Now, that candlestick pattern, this is a good question. Did that candlestick pattern work? Who's going to say yes or no? No one's brave enough to say yes or no. Or you're all in the past. because the stream's lagged, and I'm going to sit here for 15 minutes now, and someone's going to go, yes. That won't make any sense. No one's saying anything. Right. So basically, whether this worked or not, right, this candlestick pattern, Michael says yes, right. So Michael's right. It did work. I was hoping someone was going to say no, because they're also right. It didn't work. Yeah. What makes this candlestick pattern work or not work, right? Whether or not you made money. That's literally it, right? So whenever you take any system, any indicator, any strategy that creates a need to take a trade in the market, the reason it works or doesn't work is purely down to the result, which is either a positive or a negative on your P&L, right? So if you took this 3-bar reversal here, short, when that candle closed, you hit the short button, right? If you placed a stop loss above the high, it didn't work. If you placed a stop loss half an ADR above your entry, it did work. If you didn't use a stop loss, it did work. Yeah. So there's 3 reasons there on that one trade, which are 3 totally different outcomes. One of them is a stop out, because you used an order in the market to get you out at a loss. You told the market, I think this is going down, but if it pops up in the next 2 hours, just take my money away and I'll go and do something else. Or you were clever enough to go, well, price moves in average daily range, so I'll make sure that I give myself plenty of breathing room, because it moves up and down 68% of the time within an ADR. I'll make sure I put my stop far enough away that hopefully it won't get hit today, and then the market will be able to make a decision. Or you just went, I'm not using stupid stop losses because they just make me lose, and you won. But that had nothing to do with the 3-bar reversal. That had everything to do with your positioning of the orders to exit the market. Yeah. So people ask me all the time, what's the strike rate of the market reversal alerts indicator? 100%. Because when that paints, it means that price has broken structure. So 100% of the time, this works. That's the answer to the question. And I always get it, and everyone's always sarcastic bastards. No, it's true. It's 100% strike rate. Are you asking me how many times you make money out of it? I don't know. Where's your TP? Is it 2 pips or is it 200 pips? Because there's a very different outcome on the strike rate of that indicator if you use a 2 pip or a 200 pip TP. Are you using a stop loss or not? There's 1,000 combinations or permutations of getting into a trade that will or won't make you money. Yeah. So an inside bar, he says, looking for an inside bar. There's an outside bar there as well. Look, that's another great candlestick pattern. What's an outside bar? Same as an inside bar, just in reverse. It means that we had contraction, and then the market went up and down, and the buyers and sellers couldn't actually decide which way to go. So you take a break of that one. Did it work? You took a break long. You took a break short. Did that trade work? Don't know. You're probably still in it. If you took the short one, you might be just considering getting out. If you took the long one, you might have got out there. I don't know. That's got nothing to do with that outside bar, is it? Everybody's looking for the holy grail that gets it right. Nothing gets it right. I'm going miles back in chat now. Yeah, all works apart from GU at the moment. Yeah, exactly. But look at GU. Yeah, I mean, this is the thing. I've made a loss on GU. I'm still in it. I'm not out of it. I'm in it. I'm in long. I've been in long for 2 months, 2.5 months. Where are we? 19th of July, I got into this. Still in it. Am I right or wrong? I'm not. I'm in it. How long have you been trading? 15 years. 16 years this year. Sibo, if a broker offers an account with no spread and no commission on a trade, how do they make their money? They don't. There isn't such a thing. Somehow, but if you are passionate about it, it's not boring. I'm only here for Lee's dry humor. Don't even trade. Really? Huh. That's interesting. I wonder how many other people are here. There's 74 people in here at the moment. Not one of them even knows what trading is. They were like, I just like watching him. That'd be worrying, wouldn't it? CAD Swiss. I'm long 2.72 on the CAD Swiss. 0.72. That's a long trade, isn't it? So you're looking for a breakout of that high. All the way up to there. If oil rallies, could well be up there at some point. But you know, you're an investor, aren't you? Because you're looking for a target that is going to take a good 12 months to achieve, which is absolutely nothing wrong with it. But that's the sort of thing that Darwin-X are looking for. People like that. Yeah. Look how long it's been. So let's go back to December this year, or January this year. That's January this year. Look how far you've gone since January. You're saying you want it to go all the way up to there. It's a good year, 2-year move, that. Current market conditions. Depends on TP, AZ. See, AZ got it right. He listens. Or she. Or them. I don't know. Who knows these days? You can be anything you like. We've got a guy up the road who identifies as a furry. I had to look it up. Anyway, I'm not going down that road. I will get myself into all sorts of trouble. Right, I'm going to leave it there. Excuse me. So we're just coming down to retest that low from Friday on this at the minute. So if you want to trade the DAX this afternoon or today, just be aware that the market shut this afternoon. Yeah, nothing's happening. We're closed. So don't expect any movement much out of this. There's a very good chance that we might well just sit around. So when we get to kind of lunchtime-ish, we're probably going to be doing something like that. However, on big gap days, we quite often get big, strong continuation moves or very fast, swift gap fills. However, I wouldn't know how many gaps we've had on a bank holiday. So when you look at gap fills, yeah, you've got to also take into account that 3 of the major trading countries are shut. Yeah, US, Canada, and Japan aren't trading today. So what happens on a gap down day when there's a bank holiday? You'd have to go and look through your charts at every bank holiday that's happened in the past and see if there was a gap on that day and have a look at what happened on those days. I would probably find it's something around the region of 50% of them went up and 50% of them went down. But I'm just saying, don't look for loads of movement today. So it's going to be a quiet one. So that's basically plan for the day. The only thing I'm going to get into today potentially is oil. We are pulling back for the gap fill at the moment on oil. We're talking about gaps a lot at the moment, aren't we? But that's so the actual gap fill is obviously where we closed last week. However, I'm always looking at gap fills as roughly around the area. So look at the highs of Friday on oil. Really, really contracted day on Friday. Look, compared to the rest of the week. Oil inventories. So if we get back down to there, which is 125 ADR to the downside, I'm just going to trail basically this order down. You can use the reversal alert CA to get you in, but you're going to find it's probably not going to paint correctly at the moment until we've got some movement because we've got a gap. So just wait basically for price to get down into this area, and then I will be trailing an order down. I'm going to keep it above that high. So what I'm looking for basically is for, you know, a move up. I want a big, strong move to the upside to show me that we got some buyers on side, and then hope that we start a new leg. That's basically what I'm looking for. But what I would much rather see today, which would be a nicer thing, is if it just pushes down and grinds down all day down to here. I'll check it every hour or so, and then literally just wait for a push, and then you're in. And then we'll see if we can get a move. Yes, I place my order and forget about it. Stop day trading and treat trading like an investment, not a job. EU and UK markets still open though. Yeah. Although there's basically for banks and institutions to transact, they basically the way that the banking system works is you have three major hubs. You've got London, New York, and Singapore. Yeah. So the way that it works is Singapore opens first. New Zealand is the first market to open. So Singapore opens first. We trade through the Asian session. The Asian session then passes their book to London. London then does what it needs to do, who then, when New York opens, passes over to New York. So you get high volume through Asia, high volume through London, high volume through New York. While those two overlap with each other, and those two, to a certain extent, overlap with each other, the vast majority of the trading is done there. So you get low volume. Because we're not going there, that volume that's executed this morning won't be there this afternoon. Yeah. So although the market's open in London and Frankfurt, we're not, orders are executed. Yeah. Like, remember I said, this is what ADR is all about. The banks and institutions will have order books that they have to complete. Once those order books are completed, that's it. It's like done for the day. Yeah. So I'm a banker. I'm sitting at a desk and I get a pile on my desk that says you've got to execute all these orders today. Yeah. When I've executed all these orders today, I've done my job. My work's done. So then I can go, right, who wants a game of Clash of Clans? Yeah. That's it. So once the orders are executed, we don't suddenly go, oh, hang on, here, let's do tomorrow's work. We haven't got tomorrow's work. We've done today's work. Yeah. So this is why you have an average daily range. The market executes a certain amount of volume every day. Yeah, you don't have more volume if there's no reason for volume. There is no reason for volume today because we have no news. The New York session isn't there, so we have lower volume than normal during the afternoon. London isn't just suddenly going to go, oh, I'll tell you what, we'll just do a load more. There isn't any. Yeah, so you won't suddenly get a big flurry of orders unless something happens. If something happens, damn right. So keep your eyes peeled on financial juice. Because you might have something big happening, especially around, obviously, what's going on in Israel at the moment. We have re-established control of communities on the Gaza periphery. So things that will move this are things like the US saying, our troops are ready for deployment should X require it, or this is the reason we would get involved, or some news event that is like, holy crap, if they're talking about that, this is bad. That will tank the markets, make oil pop, all that sort of stuff. So this is what's going to move the market today, if anything. Everything else is just done. So hence no afternoon session, but keep your eyes peeled. You know, I was saying this is my P&L is just going to be flip-flopping for the next couple of days unless something kicks off, and it's not, is it? What pair do you recommend for Asian session? Asian pairs, Aussie, New Zealand, yen. You trade the Asian pairs in the Asian session, Aussie, New Zealand, and yen. But I wouldn't recommend trading the Asian session. Answer this question, Royal, as you answered it. To make money, what do you need? What's the one thing you need to be able to make money when you're a trader? You might not get it because it sounds really obvious, but there's one thing that you have to have. Volume. Yeah, it's close enough. Movement. Yeah. If you buy this and it doesn't do anything but that, what can't you do? Make money. What happens in the Asian session? Nothing. So why trade when the one thing you need as a trader isn't available to you? Movement. I made 2.38% on Friday. Why? Because of that. Yeah, you can't make money in a flat market. So don't trade Asia because it's just not worth the hassle. Same as the Globex session, yeah. So a lot of people, it's the same with the Globex session, yeah. So if you look at, yeah, this is Globex. There's the New York. This is a bad day. Let's choose another day. Let's try and find a better day, really. Okay. So this is what they call the Globex session. So this is the Chicago Mercantile Exchange automated trading system on the Dow. So Globex does this. Yeah. This is a bad day as well because it wasn't a great breakout, but that's where the market opened, yeah? So you see all the size of the candlesticks here. Look at the size of the candlesticks, how big they are in Globex. Get the odd move. That's what a normal candlestick is in Globex. That's a normal candlestick during the New York trading session. But the size difference between that and that. That's very hard to make money in. That's really easy to make money in because I can get in and get out 5 minutes later. If I get in there, I have to wait hours to get the same amount of movement I get in 5 minutes when I'm trading the New York Open. Yeah, so you always trade when the market is going to give you the opportunities. Yes, it will move up and down, but look how hard it is to make that. And you have to wait forever. And you'll get thousands of signals. If you're trading candlestick pattern recognition here, you'll get killed because there'll be bullish engulfing, followed by bearish engulfing, followed by shooting stars, hammers, 3-bar reversals, inside bars, outside bars, because all the market's doing is executing loads of orders at random and making things go up and down all the time. You'll see stuff that is just irrelevant. Yeah. That propulsion move there was caused by a large order. Where's it going after that? Down. That's what it does when a massive amount of sales come in. You won't get back through that very easily. Yeah. In here, you're going to have thousands of things that look like they might be a big sell order, but it's just a little bit more volume than normal. So you wait. Very difficult to make money in Globex. If you go into any futures platforms or futures Discord channels, Telegram channels, you'll see people talking about it and debating it until the cows come home. Oh, I made $2.5 grand in Globex today. Ask them how many times they lost $2.5 grand in Globex. There'll have been a lot more losses than there are wins because the thing just goes sideways forever. Trade when there's volume. This is the whole edge of the opening range breakout strategy. We know when the volume's coming, use it. We know when the news is coming, use it. Use it to your advantage, whether it be good or bad. Yeah. If we have a news event go against a position, it's not a bad thing. Yeah, we know why it's happened. We can enter again and wait for the pullback to scale out. But the news has happened. Yeah, everybody got caught offside on Friday, didn't they, with the US dollar? Doesn't matter which direction it's going, it moved. Now only focus on London and New York. Yeah, exactly. Where did you take profit on US dollar CAD? Friday after the CAD move. I posted it in Telegram. Target was my target was there, that propulsion move. So we had that little accumulation which we broke there. So those propulsion gaps at ADR today was where I was targeting. But I just wanted to reduce my US dollar exposure. I still think it's coming down, but there's no point in having so much risk on. So I'm still, as most people are, very unsure about the US dollar at the moment. Every time the US dollar have said, the Fed have said, we're not going to do any more interest rate rises, they turn around 3 weeks later and go, maybe just one more. And it just spooks the market into a rally. And then it doesn't happen and we get a dip. And then we get another rally. But the rallies are always stronger than the dips. And I don't want too much exposure on the US dollar in the opposite direction. I think it's coming down. But if it does go up, I just want to... There's absolutely no point in not taking that. That was, I think, 0.7% or 0.6%. I posted it in Telegram, whatever it was. I can't remember exactly what it was, but there's no point in having too much exposure on it. There you go. 0.6% it was. There's 0.5% profit. There's just literally no point in leaving it on over the weekend. I've got other stuff on short. So look at it. But look at it. That's not even a retracement. It's just the low of 3 or 4 days worth of activity. But yeah, that propulsion gap, we've tested it twice today. Look, that propulsion move, which is the Canadian dollar unemployment rate not going up. We tested it this morning in Asia. They sold it. We're pushed back up towards it in London. They're selling it at the moment. If we break that low today, we're just going to trickle off. And then we'll be back down into that accumulation, which is why that was the target originally. But equally, you know, we could sit here. The thing I'm worried about with the US dollar is sitting here for 2 days, today and tomorrow, and then FOMC on Wednesday, them coming out with a massive bullish statement about increasing interest rates. If that happens and we get PMI figures coming out positive on Wednesday, we're going to get a run in the US. Yeah. So what I don't want to do is sit around and wait for those PPI figures to come out, not PMI, PPI figures to come out as a positive, and then for the Fed to come out on Wednesday evening and go, actually, and then it flies. So just take the money. That's what it's all about, isn't it? Banking regularly. Bank small, bank often, build a bank. I take it off too early all the time, but I take it off. Is ADR included with the market reverse alerts? Yeah, only if you use it though. So you'll only be able to see the ADR lines if the EA is using ADR as a filter. Other than that, it won't show them. Some RSIs. Oh, sorry, an RSI. Aussie New Zealand, 4 hour. Oops. That last candle just about triggered a 4 hour RSI extension. That's rubbish. Right, that's it. I'll be back tomorrow. Tomorrow morning, 7:50, same time as usual, and then back tomorrow afternoon at 2:20 for the New York session. Obviously not here this afternoon because you're not shut. So I'll be getting on with other stuff. I'll check out Darwin Zero at some point. It's on my bookmarks bar now, so I can remind myself to go and look at it and have a look and see if it's got legs, really. But I suspect, considering that they're only going to fund you with up to sort of 100 grand after 3 months, you're going to need to be pretty low risk, pretty low reward. So you might be able to squeeze 3 to 5K a month out of it if they're paying you a high proportion of your profits. But I have no idea how it works. So we will see. It's more of an investment platform, DARWINX. So I doubt very much whether it's something you can make money out of, but we'll see. I'll have a read up. All right. So anything else you need, let me know. I'll be in Telegram. Back tomorrow morning. And yeah, good luck today. Don't get too excited. I'm probably better off just coming back tomorrow, to be honest. So, all right. Have a good one. I will see you guys in the morning.